is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. We've had some great guests on recently, but Andrew and I thought it'd be helpful to get together and have a little debrief on everything that's going on in the market, on the macro side, on the crypto side. There's tons to discuss, Andrew, so let's jump right into it. So President Trump's Liberation Day turned into Liquidation Day for most people as markets plunged, fear gripped investors, and worries grew in the days that followed that this tariff tantrum could snowball into a financial contagion. After a week of carnage following that initial announcement, Trump appeared to call uncle, reversing some of these reciprocal tariffs, though ratcheting up the pressure on China. It seems like right now, the only consensus is no consensus. There's a lot of confusion, a lot of uncertainty. Markets are looking for direction. Crypto's up a little bit since all this went down, but still very much not out of the weeds yet. What's your take on everything that's going on and what it means for the crypto asset market?
Yeah, I think it's pretty interesting because at the same time we had CPI come out last week and it was way below expectations, or a little bit below expectations. It was at 2.4%. I think consensus was 2.6. And so we still see sort of this, what should be an improvement in macro conditions for long tail risk assets like crypto. But then obviously we have this, potential recessionary shock from a global trade war, which is incredibly bearish, long tail risk assets like crypto. And, obviously from Trump. So to me, it's actually interesting. I would have thought crypto would have done far worse. I think like a lot of it is just like, there's just so much whipsaw movement right now that it's really hard to know, hard to know kind of what's going on. A lot of the crypto market strategists that I, follow and sort of trust are actually quite bullish right now. They see this as like the potential trigger for a global reflationary re-leveraging event in terms of like global liquidity. And so potentially that's why sort of Bitcoin and other assets haven't traded as down as they theoretically should be, just based on like their market
Bitcoin's
betas.
at $85,000. If you look at Bitcoin versus the Mag 7 stocks since the beginning of March, when a lot of this downtrend began, it accelerated after the tariffs. But really, it's been going on for a few weeks. Bitcoin's actually outperformed that basket and has done pretty well off the bottom, actually. So yeah, I've noticed the resilience, though I have to admit this resilience is not something that's widely shared within the crypto space or even amongst companies that have exposure to this. Coinbase, for example, Ethereum, these other large cap assets that are widely held are way down, right? So it seems like maybe there's some Bitcoin exceptionalism going on.
Yeah, for sure. I mean, I think it's interesting too because gold has held up really well, right? So maybe Bitcoin's getting a bit of
like an all-time high.
Yeah,
it's holding up is an understatement, I would say.
Yeah. So I guess what I'm trying to say is like Bitcoin is different than the rest of the crypto market. It seems
that's what it seems like right now.
Yeah, and so yeah. I mean, I think it's like it's tough to say. I think like the rest of the crypto asset class is incredibly leveraged to the global liquidity cycle, and so a massive recessionary shock like this, at least in the short term, is very negative. Those types of assets. And so Bitcoin's obviously this kind of like hybrid. I still think Bitcoin's very levered to the global liquidity cycle as well. But yeah, what's interesting is this has actually made a lot of the sort of like longer term market strategists in crypto even more bullish. I'm seeing a lot of calls for 200K, 250K Bitcoin by the end of the year, mostly off the back that this is going to essentially force the Fed's hand potentially. Which seems kind of sort of counterintuitive, especially when you talk to like TradFi people, because sort of the consensus is that in the short term, tariffs are highly inflationary, even if in like the medium to long term, they are, essentially deflationary by virtue of being a tax increase. So maybe crypto and maybe Bitcoin sort of like seeing through that sort of recessionary, inflationary, recessionary impact in the short term and sort of seeing through to the other side, which could be like a global liquidity surge in the second half of the year. Who knows? I think what's interesting is the crypto space, besides Bitcoin, has obviously just been getting nuked, sort of Ethereum particularly. And so that kind of goes counter to what I just said in terms of the crypto market seeing through. And maybe, I don't know. It's tough to really know, but personally, I'm not like this global the global trade war with Trump. There's obviously a lot of volatility in the short term. Personally, I could be wrong, but I don't think this will continue to last beyond the first half of this year, just because it's so disruptive.
Yeah, well, we'll see. We'll see.
But the one thing that is interesting though is that Trump's approval rating's actually been going up in the short term. So yeah, I don't know. What do you think about this?
Well, I don't really know what's going to happen in the short term. In the medium to long term, I think you're probably right in the sense that we're already seeing Federal Reserve members as well as the Treasury Secretary floating ideas on how to increase liquidity, ease financial conditions. So starting with the SLR exemption, something we were talking about before the show, basically lowering capital requirements for banks to own treasuries, meaning that there could be more of a bid for U.S. government debt, which could push yields lower and put some more cash into the system. And then last week, the Fed basically saying like they'll step in and do what's necessary to calm the markets and to manage liquidity. So those are the kinds of signals the market likes to see. Earnings so far have been really strong too, which I think is kind of interesting. Mostly big banks, so we haven't had as much tariff chatter as we will later on when we hear from some companies that are more sensitive to trade, especially retailers, CPG companies, and so forth. So I think that should give us some indication of where we're headed. But on the crypto side of things, we look at the data and you look at the news flow and what's expected, and it's almost all pretty much positive. And I would break it down into sort of 3 or 4 different buckets, right? So number one is the technology itself is actually scaling to meet the demands of businesses and developers who are using it. And there's no clear picture of where that is taking place than in the stablecoin space. Stablecoins have exceeded $200 billion in size. They do more dollar volume than Visa network. And they're starting to find a lot of utility beyond crypto in day-to-day payments and financial services. That's one. Number two is you're seeing enterprise adoption, or at least like a destigmatization, where big companies are willing to embrace this technology or use it. And that's been evidenced not just in finance with asset managers like BlackRock and Fidelity and Franklin Templeton, but really across the economy and the different industries. And I think that's really important. Number three is that we've got government regulations and policies that are easing in the US in particular, but frankly, all around the world. And that's something that I think is going to take a headwind, which was the uncertainty and the risk around what governments would do, and turn it into a tailwind that I think is going to accelerate adoption, accelerate the growth in the industry. So taken as a whole, you have all these big positives, and we don't have to go through all the specifics, but it's everything from stablecoin laws to changing or bank rules to like the suspension of investigations into certain companies, which many people viewed as sort of being targeted, to new administrators in the SEC that could see the introduction of new companies on the public markets. All this stuff is all very positive. And so that is like the backdrop for everything that's happening. So it's hard to predict the tariff space because I do really think it's being driven by the whims of Trump, who I think is a really, mercurial and temperamental person and very prideful, right? And so a lot of this is about managing his ego, and we'll see where we get with that. But the fundamental backdrop for the crypto space is very, very positive. And I would point to a couple of like interesting stories that have emerged recently that I think really speak to that. So many of people who listen to the show will remember that in February, the White House brought together executives from the industry for a round table. And I think a lot of folks were expecting big announcements, the Bitcoin strategic reserve and so forth. But there was a lot of language in that discussion, which was more significant than the big headlines. One of those pieces of language that I'd like to draw people's attention to was Scott Bessent, who's the Treasury Secretary, and he's kind of under fire for everything that's going on in the tariff space right now. But he said at the time that the government is focused on making the US dollar, maintaining the US dollar's global reserve currency status, and it was going to use stablecoins to do that. And he was sitting right next to Jeremy Allaire, the CEO of Circle, the company that I think we talked about recently is going to be going public sometime this year. They're currently in a quiet period. And this question of stablecoins, I think, is really, really important because it ties directly into the global macro and what's going on right now, which is that there's been a widespread sell-off in bonds, one of the worst in years since I think the COVID crisis, in fact. And that's what's got the Fed and the Treasury saying they're going to step in and do everything they can to support the market and to maintain, liquidity. But one of the reasons that people have raised is that they think that there are sovereign actors, mainly China, who are de-dollarizing their reserves. So maybe that's because they're trying to stick it to Trump and this is part of trade war tactics, or maybe this is part of a longer trend of them just trying to diversify away from the dollar. But the upshot of all that is that big sources of demand for dollars, and sovereigns are no longer the biggest, but they're still meaningful, is going to probably roll off with time, or it's going to be less important. So there needs to be a new source of demand for US government debt. A lot of retail institutional investors will continue to soak this up, as will prime dealers and other institutions. But this new source is emerging, which is stablecoins. So stablecoins, as I mentioned, over $200 billion in circulating supply, in 100% reserve-backed stablecoins. So those are fully collateralized. Those have to be collateralized with treasuries or dollar equivalents somewhere. So right now, $200 billion is frankly not that big. It's, I think, 0.5% of the entire treasury market. But a lot of people have estimated or expect it'll get a lot bigger. Like Jeremy Allaire thinks it'll get to 3 trillion by 2030. So once you're into that category, that becomes like a massive buyer of treasuries. So it performs this dual function where A, it could be a source of demand for treasuries and could help to offset the roll-off we see from China. And B, it's turning the dollar into a digital utility that can be used by anyone, anywhere in the world, which, all things being equal, probably strengthens the dollar's global reserve status, makes it more useful in the world, right? So in a way, like, this global macro seems unrelated to what's happening in crypto, but in fact, the two things are more closely related than we might imagine. I don't know if you've been following that story very much, but to me, like, this tokenization of assets is going to be, one of the biggest, if not the biggest, stories in finance in the next, decade. And it's being driven, at least right now, through dollars and with stable coins. Yeah, no, and I actually saw. I heard as sort of Japan was one of the other sort of entities selling their treasuries, but and that's also why we've been seeing some talk about the sort of SLR exemption being removed, so that essentially U.S. banks could buy treasuries without having it sort of lower the amount of capital, lower the capital requirements they have to have. But what's interesting also is we also saw, because we've talked a lot about like stablecoins. I think we've been talking a lot about stablecoins, RWAs on the show over the last couple of weeks. I feel like that's and I saw, yeah. And what's also really interesting is gold, on-chain gold trading hit like crazy new highs in the last couple of weeks. Really? Particularly on Ethereum. So is that Paxos? Like, because I know Paxos, Tether, there's Matador, there's a bunch of these guys. Do you know what data they're pulling that from? Yeah. So I'm just looking at, So this here, I'll just grab this chart. Yeah. So Ethereum had one of its largest weeks of tokenized gold volume on chain, and then also at the same time, Forex DEX trading volume reached a 2-year high on Ethereum as well. So this is like US dollar to euro stablecoin trades, essentially fiat to fiat trades on chain. Yeah. And it's just a completely mental chart of if you look at the gold one, I think this is from Blockworks, but it's just like a chart up, like
up and to the right in an exponential fashion, and like literally like 2x larger than any other week. And so, and there's just been, and then the same thing for stablecoin swaps. Most of it driven by euro to US dollar. And even just talking to some of our own sort of users, a lot of our users were asking if we can integrate like literally euro stablecoins into the site, because some of them didn't want to hold USD stablecoins anymore, which I thought was really, I've never ever heard that from like any of our user base ever. So there's definitely, it's interesting. I mean, I think like one of the things we always talk about on this platform is how crypto is like the most dollarized world there is. In the sense that like the US dollar just completely dominates. But if we see more and more sort of uncertainty with the US, then this could be the opening that is needed for essentially other RWAs to finally gain market share, most notably like euro stablecoins and gold and things like that. So it's interesting. But on your point though, I totally agree. I mean, I think the US dollar stablecoins are very clearly they're a huge asset for the US Treasury, in the sense that you have this like permanent buyer and holder of Treasury. So I totally agree with everything you just said, but it's interesting to see that all of this like disruption in the last couple of weeks is maybe also opening the door for alternatives.
It is interesting. I think a part of that is also, the companies respond to incentives, and the incentive to launch a euro dollar stablecoin or euro stablecoin has increased because the yields on European debt have gone up, and the business model essentially for a stablecoin issuer is to mint stablecoins, hold collateral, and then earn the interest on the collateral. So the higher the yields on the collateral, the more the stablecoin issuer can make. There was a time, Andrew, when US dollar stablecoins launched back in the ZIRP era, the zero interest rate era, where European debt was negative interest rate, where like German bonds, you had to like pay them to hold it, which I'll never understand. But that was difficult to justify launching a stablecoin if you can't earn any money from it, right? So there's another sort of dimension to it that I think is very, very important too. So going back to, we talk a lot about the US, but there's some interesting news in Canada, which is that the Canadian regulators approved Solana ETFs. And those, I think, will start trading on Wednesday, April 16th. So I think by the time people listen to this podcast, they will have begun trading. I'm really curious to see how this goes. So the last two launches that we've seen were in the US. It was Bitcoin and Ethereum, right? And with Bitcoin and Ethereum, there was these pre-existing closed-end funds, the Grayscale Bitcoin Trust and the Grayscale Ethereum Trust. So at least initially, there was a lot of creations of ETFs. So people were buying into these ETFs. But at the same time, a lot of people were redeeming or selling out of the closed-end funds. And the reason for that is that people before that, they were able to buy those at a discount in the gray market and sell at NAV when they converted. With Solana, this particular launch, there is no overhang from closed-end funds, right? So the only one that does exist is in the US, GSOL. And since ETFs have not yet been approved for Solana in the US, that's not going to be a source of supply. Meaning, blah, 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 that there's only going to be buying, right? And so the question is, how much buying? What impact is that going to have on the market? And what does it tell us, too, about sort of the relative strength of Solana versus some of these other different kinds of assets? So looking at the Canadian market right now, the Bitcoin ETF market is 5.5 billion in size. The Ether ETF market is 746 million in size. The daily average turnover of Bitcoin and Ether ETFs was 93 and 12 million respectively over the last 20 days. So we're not sure how much the Solana ETFs are going to earn. Solana does have a market cap of around $70 billion, smaller than Ethereum, but sort of getting closer into that ballpark. And there are 4 different groups who are trying to do that. they're fairly similar in sort of makeup, though some have lower fees, some have higher fees, and some are paying out more of the staking reward, some are paying out less of the staking reward. So this is another thing that's kind of interesting, which is that it seems as if the rule is that you can't stake more than 50% of the assets in one of these funds. All of these have listed as up to 50%, so that's pretty clear. And I think that the reason for that is ETFs are open-ended vehicles. If someone was a huge investor and wanted to redeem en masse, like take a huge amount out, they need to get liquidity on the asset really quickly. If it's bonded to the network, and even in the case of Solana, I think it's a few days, they couldn't satisfy that redemption right away, right? So there's some limitations to this, but at least they're up to 50% staking, which I think is really interesting. So a reminder that for all the hoopla about the US, Canada continues to make new firsts, hit new milestones when it comes to these products. And in the case of Solana, is leading the way. So I think that's pretty exciting news.
Yeah, I think it's really exciting news. I mean, I think it's interesting. Canada's still leading the pack in terms of having these new types of ETFs, which I'm very appreciative to see. I think it's interesting. Solana's obviously gained a lot of market share, user growth over the last 12 months. But a lot of it was also built on sort of the meme coin casino, which thankfully has kind of imploded in the last 2 to 3 months. I think like meme coin trading volumes are down 90+%. So obviously if we do get like another global liquidity surge, maybe they'll kind of come back. But if you look at the last bull market, NFTs sort of died, and then the rest of crypto sort of had its best period for the 12 months after. So we'll see. But yeah, I mean, I think it's going to be interesting. I think I think the biggest impact of the Solana ETFs and all these types of things is really going to be on like the Sol strategies, the sort of Solana specific companies. I mean, not Sol strategies, not specifically focusing on them, but just because I think like it's going to be obviously harder to stand out if there's like pure play synthetic spot exposure.
What I would say to that is that the Bitcoin ETF launched and MicroStrategy was already in the market, and MicroStrategy, which is a corporation that has a Bitcoin balance sheet strategy, outperformed Bitcoin during that period, and it did so for various reasons. But it's interesting that I think there's room for more than one of these kinds of vehicles. I think in the case of staking, for example, ETFs can stake up to 50%. My understanding is that companies, because they don't have this redemption function, if they happen to own these assets on their balance sheet, can stake a much higher percentage, right? And can reinvest and compound that. So, it's a different kind of approach. And so I think that there's probably merit and value to both of those things. My view is also just as a general philosophical view that we're still pretty early when it comes to giving traditional investors exposure to this asset class. And so I think that it's more a question of the pie growing than it is about grabbing like a slice of it, at least at this stage.
Yeah. Yeah, I think that's probably fair. It's funny that it's still hard for the TradFi world to get exposure to crypto. Like when I first got into crypto 8 years ago, it seemed obvious that, lowering that friction was going to be kind of like was coming. And to me, that was always like one of the biggest, most bullish catalysts for crypto was just the fact that it's so hard to actually get exposure to crypto.
Yeah.
And 8 years later, it's significantly easier now, but it's still pretty hard. And in a lot of ways, it's almost harder because there's just so many more investable coins than there was 8 years ago. So even though like, there's a Bitcoin ETF, there's an Ethereum ETF, there's just so many more coins that are, in my opinion, are investable, and they're still quite hard to actually invest in. So.
Yeah, that's the truth. Speaking of coins that are hard to invest in, you had a great month with SX in March, right? Do you want to tell us a little bit about what's new with you?
Yeah, we had our biggest month ever. So we hit $32 million in transaction volume, trading volume, betting volume, whatever you want to call it, in March. So that was our first time ever breaking 30 million. Our previous best month was actually 22 million. So we destroyed our previous record. We also hit 100,000. We broke 100,000 individual trades in the month for the first time ever as well. And Q1 just generally was our best month ever, which is great, even though we've completely eliminated all of our incentives, like token incentives and things like that. So the platform's just organically growing because we provide a really good value prop for our specific target market, which is sophisticated institutional bettors, people who actually essentially bet on sports professionally, which is a very underserved market. And so it's been great to keep the momentum going, obviously. And we're just we're continuing to grind away. We got lots and lots of great announcements and stuff coming down the pipeline. We're working on this on-chain order book, which I think is really cool. And I think that's going to be a big trend in DeFi over the next kind of 6 to 12 months plus is essentially projects leveraging vertical integration by building their own app chains or roll apps, whatever you want to call them.
Yeah.
And then using the chain level to actually monetize. I think we're obviously, plugging away and doing relatively good. Excited for, I think it's interesting because I'm both an investor and a builder in the space.
Yeah.
And weirdly, I'm usually happiest as a builder when I'm least happy as an investor, and vice versa. So right now we're bear market, but it's actually a pretty good time to be sort of a builder in the space. It's a little bit more quiet, a little bit more sort of focus on the fundamentals, and just trying to build a real actual business, which is rare in this space. but just grinding along, and hopefully I'm looking forward to the day when I'll be very happy as an investor as well, when crypto starts to has its global liquidity surge and starts to make new highs again. But in the meantime, enjoying the time as a builder.
I mean, in the meantime, hitting new record highs. I think you're probably one of the few businesses in the world where March was your best month ever. So that's something to be proud of, given all this uncertainty that's going on in the world. I don't know. I don't really have much else to talk about today, Andrew. I mean, I think we're going to be keeping a pretty close eye on the macro side of things. Some stuff that I'll be focusing on, I think, in the next little while. There is some legislation that's moving through both the House and the Senate at the same time around stablecoins. So again, I know we harp on this topic, but getting our first sort of legislative milestone of this new administration in this area, I think, is going to help to validate that part of the thesis, and is also going to open the floodgates to some new companies entering the space. And I believe that the new SEC chair is going to be starting soon, Paul Atkins, and so there's going to be a lot of action here in the next little while. And we're going to be covering it all here on DeFi Decoded. So that's it for this week's episode. Andrew, great to chat macro as always with you and to talk about all the things that are going on in the world. We don't have a crystal ball, but we try to, learn as much as we can and share that information and our opinions with you. So if you enjoyed this episode, tune in next time. And please don't forget to subscribe, rate, comment on the podcast wherever you listen to it, Apple, Spotify, etc. We appreciate the feedback. Okay, that's it. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.